Happy Friday out there, folks. This is Darius Dale here to present our macro minute for Friday, February 25th, 2022. Starting with markets this morning, we have stocks mixed with the U.S. lagging, commodities mixed this morning, crypto up, dollar down, global bond yields up. Big movers, we have Germany's DAX and Japan's Nikkei 225 index up around 2% apiece, Nat gas down around 3%. On the macro front, the increasingly global divergence between consumer and business confidence represents a brewing source of angst for investors. The divergence between leading macro fundamentals like growth, inflation, policy, positioning, and coincident to lagging micro fundamentals like sales, margins, and profits has widened to historic wide, certainly as wide as anything I've seen in my career. So, looking at February, the latest batch of February leading survey data, on the improving side of things, we have the KC Fed's manufacturing index, Italy's economic sentiment index, rather, the Eurozone economic sentiment index, the Eurozone industrial confidence index, and the Eurozone services confidence index. And then looking at what declined month over month in February at the UK consumer confidence, Italian consumer confidence, and the Eurozone consumer confidence is very much resonates with the pattern of data we've seen February to date out of the US economy. Shifting gears to the probable range setups, nothing overbought in the global macro risk matrix, oversold signal in Germany's DAX, MSCI emerging market index, and the British pound. The S&P 500 is still neutral VAMs at minus 1% downside versus 7.8% upside. Taking it to the chart here this morning, we got high yield OAS. We're looking at the market CDX index trading around 369 basis points wide. Again, these are option adjusted spreads, so it's, spreads relative to similar maturity treasuries. Once you adjust for the call options in the credit instruments, what we're showing here is a pretty, I want to, I guess you can call it tame pattern of appreciation or widening in the credit spreads. Certainly it's a lot tamer than what we saw here, which caused the Fed pivot. And I would argue certainly a little bit less tame than what we saw in Q4 of 2018. We saw spreads get right around kind of 485 over on this metric. If you look at the Bloomberg Barclays metric, it was somewhere around 550 over in terms of where it caused the Fed to finally start to pivot back to dovish. But again, one thing that both of these instances have that we both these instances did not have that we have today, which is 40-year high in dot dot dot. I'll let you finish that sentence. Shifting back to the probable ranges, WTI neutral VAMs minus 9% downside versus 9% upside. So fair fight there. Bloomberg Dollar Index, bullish VAMs minus 1.1% downside versus 0.7% upside. 10-year Treasury yield, bullish VAMs minus 8% basis points of downside versus 25 basis points of upside. Bitcoin still bearish VAMs minus 12% of downside versus 10% of upside. Ethereum bearish VAM still minus 16% of downside versus 13% of upside. And then lastly, gold neutral VAMs minus 4.5% of downside versus 1.5% of upside. So with that, Darius Dale presenting our macro minute for Friday, February 25th, 2022. Everyone have a wonderful weekend out there. Cheers.